This is Dan Busby. It's my privilege to serve as ECFA's president. And welcome to today's webinar as we present a federal parking tax on churches and other nonprofits. Is this for real? And Michael Batts is with me today for this important webinar, and we're so glad that you have joined us. Over 1,500 individuals have signed up for today's free webinar and the recording. Because the webinar is scheduled for only 30 minutes, it does not qualify for continuing professional education credit. We may continue to take questions for a few minutes after the 30-minute mark. Please join me in prayer for today's webinar. Father, thank you for this opportunity to share this important information. And now bless all of the organizations represented on the call and Mike Batts as he presents today. In the name of Jesus Christ, our Savior, amen. Well, again, it's a privilege to have Mike Batts with us. Mike is a CPA and the president and managing partner of Batts, Morrison, Wales & Lee, a national CPA firm dedicated exclusively to protecting nonprofits and their leaders across the United States. He is a member of the ECFA board and its current chairman. Mike has more than 25 years of experience serving nonprofit organizations. He is a national speaker and author, having written 3 books and numerous professional articles on matters related to the nonprofit sector. Well, Mike, in February and March of this year, we highlighted the nonprofit parking tax in forums that we conducted across the United States. And we were hopeful that the nonprofit parking tax would be repealed in a tax reform corrections bill, but that did not happen. And the new tax is of significant concern to all types of nonprofits, including churches of many types and sizes. If one only considers ECFA members, they provide over 150,000 parking spaces in the United States. And when you think of all nonprofits in the United States, they provide about 15 million parking spaces. So this new tax is a really big deal. In recent days, we have communicated with a number of law firms and government officials about this matter. And the only thing that is clear is that the nonprofit parking tax provisions are not clear. But we will provide as much clarity today as possible. So with that introduction, Mike, take it away.
Well, thank you very much, Dan. It's always great to be with you and great to be involved in the work of ECFA. In the interest of time, we're going to jump right in. I'd like to just give some context for this issue so that everybody understands where it came from. In the big tax reform law that Congress passed at the end of 2017, there was a provision that disallows tax deductions for businesses for the expenses that they incur in providing what the law calls qualified transportation fringes to their employees, including qualified parking. So this was a provision that disallowed a deduction for businesses for qualified transportation fringes. Now that term includes benefits like transit passes and some other commuter expense benefits, but in that definition is the term qualified parking, and that term is defined as parking provided to an employee on or near the business premises of the employer. So it's, our common definition is parking provided by the employer to the employee at work. That would be qualified parking. So, and that was all part of the fact that Congress reduced the top marginal corporate tax rates for businesses from 35% to 21%. And this was one of the ways that they helped offset that tax rate decrease. Now, there's a little known and less understood provision in that same law, the Tax Cuts and Jobs Act, and that is new Section 512A7. New Section 512A7 states that tax-exempt organizations must treat as unrelated business income, which is subject to federal income tax, any amounts paid or incurred after December 31 of 2017 for such benefits if they would be disallowed for businesses. Now, Dan, this comes from, and what we've been told more than once, and one of the spokespeople for one of the key members of Congress was quoted in a Politico article as saying that some members of Congress felt that a provision like this to create this new tax for nonprofits was necessary to, quote, level the playing field, close quote, between businesses and tax-exempt organizations. Well, there are a lot of us who don't believe that that premise is appropriate. There are some fundamental differences between businesses and nonprofit organizations, and one of the main purposes of tax exemption for nonprofits is that they don't have the same playing field when it comes to the tax burden. But be that as it may, that was the theory behind adding this new tax. Now, the law says that the secretary, referring of course to the Treasury Secretary, and practically meaning the Treasury Department or the IRS, shall issue guidance as may be necessary or appropriate to carry out the purposes of this paragraph, including regulations or other guidance, providing for the appropriate allocation of depreciation and other costs with respect to facilities used for parking. So let me kind of translate all of that into maybe plain English, plain language. What it is saying is, first of all, businesses are not able to deduct the expenses that they incur for qualified transportation fringes, and that includes, at least ostensibly, qualified parking. This new section 512A7 says that for any expense of that type that businesses no longer can deduct, nonprofit organizations have to treat those same types of expenses as unrelated business income subject to federal income tax. That's what we're saying. Now, and then you wrap that up with this language in the statute that says that the Treasury Department or the IRS must issue guidance, essentially providing information about how we're to apply this new tax, how we're to calculate the amount subject to tax. No guidance has been issued yet as of this morning, and that presents a conundrum for nonprofit organizations because the law is effective now. As we mentioned, the law says this applies to amounts paid or incurred after December 31 of 2017. So what this means, and the IRS has indicated that this is their position on the IRS website, it means that even if you have a fiscal year and your fiscal year ends in 2018, that part of your fiscal year that includes 2018 is subject to this tax if it applies. And so it's not like it applies to tax years beginning after December of 17. It applies to any period beginning January 1st of 18, any period that includes any part of 2018. So bottom line is it's effective now. And that does present a problem because, as I mentioned, the IRS has not issued this guidance that the statute says that they have to issue. Another aspect of this, another concern or potential implication, is that it creates an income tax on a cost. That is a novel concept. You know, most of us think of an income tax being a tax on income. What this does is it creates a new income tax on the costs incurred by nonprofit organizations in providing these benefits, parking in particular. The costs that are subject to tax include costs for employee parking in connection with their performance of the organization's exempt activities. And I point that out because the law states that this tax doesn't apply as it relates to employee parking in connection with an unrelated business activity. So this is actually a tax on the cost of parking for employees who are doing the exempt work, the religious work, the educational work, the charitable work of the organization. Clearly, there are many questions that exist about the applicability and the methods for determining the costs that are subject to tax. One thing that is clear, it is clear under the law that it is cost that is subject to tax, not value, because the law says that the tax applies to amounts paid or incurred. And again, this goes back to the fact that businesses are not allowed to take a deduction for their expenses related to providing parking and qualified transportation fringes. So again, it's on the business side, it's a disallowance for a deduction for expenses they incur. On the nonprofit side, it is a tax on those expenses. That's what we're talking about. Now, depending on how the IRS or the Treasury Department drafts the guidance, this law has the potential to affect the nonprofit sector quite pervasively. And when we talk about the costs incurred for providing employee parking, we're talking about maintenance for the parking, whether it's a parking lot or a garage or whatever it may be, things like security, depreciation, which was specifically mentioned in the law, depreciation was specifically named, and other costs related to the employee parking. And depending on how Treasury drafts the guidance, what happens is we take the costs that are subject to this tax, add them together with any revenue that the organization has from unrelated business activities. And if those exceed $1,000 in a year, then we're going to have to deal with it. And that means it would be unrelated business income, and we'd have to file a Form 990T. The federal corporate income tax rate, as I mentioned, is 21% in many states. There's also a state income tax. And so what you end up with, is a combined tax rate in many situations of probably 24, 25, 26% on these costs, if indeed they apply to an organization. So it's a big deal. Organizations that are subject to the tax that have not previously been filing federal income tax returns, the 990T that I mentioned, will have to do so. And in many cases, that will create a new filing requirement as for the state level corporate tax as well. Now, when we get into these calculations, the calculations that will be necessary to determine the cost of employee parking, they could be quite complex, depending on what the guidance says about it. And, you think about things like depreciation. Well, that's not a simple thing, because in many cases, a parking lot or a parking garage was part of an overall building project. So, when we think about what is the depreciation attributable to the parking facility, we'd have to determine that. Then we get on into issues like allocating the cost, including depreciation, based on time and usage, because not all of the parking facility is used by employees and not all the time. And then we have questions like, what do we do with indirect costs and overhead, insurance, utilities, that kind of thing. So lots and lots of questions. And given that we don't have IRS guidance, a lot of confusion as to whether this tax applies, and if so, how we will have to measure it. So in terms of applicability, the law itself is written so as to apply quite broadly. Some practitioners, after analyzing the various code sections that come into play, have concluded that 512A7, this new provision in the law, will only apply to employers that have parking lots or garages where the parking is deemed to have value, where the employee parking is deemed to have value. And that is whether the organization or the surrounding properties normally or typically charge for parking. Now, where this is coming from, and I'll do a little quick, context here. Where this is coming from is there is a provision in Section 132 of the code that says that when an employer provides an employee with qualified parking, the employee is not taxed on that. That is an excludable fringe. But it's an excludable fringe, meaning not taxable to the employee, so long as the value of the parking provided to the employee doesn't exceed a limit. There's an inflation-adjusted limit to the value of employer-provided parking that employees can ignore. And for 2018, that amount is $260 per month. So 132 says that if an employer provides an employee with parking on the premises and the value of that parking is $260 a month or less, then the employee doesn't have to worry about treating that as a taxable benefit. That's why we care about the value of employee parking. And that's the only reason before now that we would have occasion to even try to figure out what the value of employee parking is. So in those scenarios where an employer provides employee parking in a lot or a garage where it normally doesn't charge and it's in an area where surrounding properties don't charge, there is IRS guidance. The best example of it is IRS Notice 94-3, which says that if that's your scenario, then the value of the parking being provided to the employee is zero. You can deem it to be zero. And again, before now, the only reason that mattered is we just needed to know that the value, whatever it is less than $260 a month, and therefore the employee can ignore it. That's the only reason we cared about it, or maybe cared about it before now. But there are some who are saying that if you look at that issue and if you determine that the value of the employee parking is indeed zero, then you can ignore 512A7. Well, it's unknown whether the IRS will, the guidance that they hopefully will issue, will conform to that conclusion. And one of the reasons it's unknown is that the law says that the costs incurred in providing the qualified parking is what is non-deductible for a business and taxable to a nonprofit. The law doesn't say that that's true, but only if the parking is deemed to have value. Now, that might be a very reasonable way for the IRS to draw the guidance, and many of us would say that would be better than having it apply to everybody, but it's not known yet until the IRS issues guidance whether that's the position they're going to take. Even if that were the position they take, determining whether the parking has value or not by looking at surrounding properties, whether there's meters in the area, and that kind of thing could be challenging. And even then, even if that were not too big of a problem, this law, if it were applied only to parking that is deemed to have some value because it's in a metro area, an urban area, you still have a massive impact on churches, ministries, charities that are located in areas where parking normally costs something, and it would still be a very, very big burden to a huge host of organizations. For those of you who are technically inclined and who want to know more about those technical tax code details and why there is indeed uncertainty regarding how some of these code sections interact, there's a very good podcast that's been put out by the law firm of Ropes and Gray, which is a very large international law firm. We have a bit.ly URL there for you. And that podcast, you can either listen to it or they have a printed transcript of it. And those attorneys get into the details of why this area isn't clear yet and won't be until we have IRS guidance. As I mentioned earlier, questions definitely abound regarding the applicability and the measurement issues. Numerous organizations have requested guidance and even deferral of the effective date. I mean, part of the argument for please at least defer the effective date, I mean, please give us a little time here, is that we're being asked to determine whether the law even applies to us, number one, and then we're being asked to calculate the tax and pay tax on it, number two, even though we have absolutely no guidance from the IRS about how to do either of those things. And the IRS, make no mistake, on the IRS website, the blurb they have on the website clearly says that if you have an organization with a fiscal year that ends in 2018, you're supposed to add the cost of the parking you provide to your employees to your 990T and report it as taxable income. So right now, they have not provided for any deferral. Numerous organizations have offered comments, submitted questions. One of the best comment letters that I've seen quite a number of them, but one of the best ones I've seen is one from the National Council of Nonprofits. The reason I think it's one of the best is because it's kind of an omnibus communication. It actually reflects and refers to comments and questions from many other organizations, including ECFA. And we've got a bit.ly URL there for you to take a look at that letter. They kind of take a lot of other organizations' comments and roll them into theirs, complete with a lot of links to those other comments to just sort of help everybody understand how much confusion there is about this issue. So let's talk for a minute about ECFA's position on this issue. We're very concerned about it, especially given that there is the potential for the IRS to apply it extremely broadly. We believe the law is absurd, fundamentally, because it is an income tax on a cost incurred by tax-exempt organizations for doing their charitable, religious, or educational work. And just fundamentally, that doesn't seem appropriate. But whether it's applied only to organizations whose employee parking is determined to have value, or whether it's applied more broadly, it still has the potential to have a massive impact and to be a massive burden and cost. As a result, ECFA has been working diligently to try to have this code section repealed, either by Congress or effectively by regulation. In other words, one of the purposes of ECFA's initiative has been to put some pressure on members of Congress and on the Treasury Department so that when there is guidance, if we can't get it repealed, there is guidance, then the guidance will be as narrow as possible. And that's part of the idea there, part of the objective. So one of the, and Dan, I know you and I had some conversations one time before with Senator Grassley when his staff was toying with the idea of requiring churches to file 990s, and we warned them that might be a pitchforks and torches kind of thing. And you know, if this ends up applying very broadly to churches and ministries and nonprofits across America, and they have to start filing tax returns and paying tax, I have a similar thought, maybe not at that level, but I have a similar thought that there will be a huge hue and cry about it.
Yes, in fact, I recall when we brought up that issue to Senator Grassley, and you used the pitchfork and torch analogy, it seemed to have a calming effect.
Yes, I remember that as well. Well, let's talk about the legislation that has been filed. There are a couple of bills that have been filed in Congress that would actually completely fix this issue. HR 6037 by Congressman Michael Conaway out of Texas, 6460 by Congressman Walker out of North Carolina would both do away with it. What's interesting is that the chairman of the House Ways and Means Committee, Kevin Brady, has not been committal in his position on the legislation, so he definitely needs convincing. and is in a position to make a big difference. ECFA has a sign-on statement, position statement that I think most people on the call would know about, but we've provided the URL for that there. More than 2,500 organizations have signed on, and Dan, I know that position statement along with the signatures, the list of organizations that have signed on has been delivered to key members of Congress and to the Treasury Department.
Yes,
so let me wrap up. Yeah, go ahead.
Yes, we hand delivered approximately 100 copies to all members of the House Ways and Means Committee and the Senate Finance Committee and the Joint Committee on Taxation, plus copies to key staffers at the Treasury.
Yeah, and that's great work, and you know that's the kind of stuff that really makes a difference. So in terms of what we're at this point, what can we do? Number one, we all need to be watching for the guidance that we hope comes out, but we want to try to preempt this, and some actions that you all, those of you who are on this webinar today, can take that really will make a difference. Reach out to Congressman Kevin Brady's office, and especially if you are in or near his district in Texas, which is just north of Houston. It's the 11th Congressional District. If any of you on the webinar happen to be in the Woodlands area of Texas, then you're right in there. But anybody who's anywhere near there, reaching out to him would make a difference. And also contact members of the House Ways and Means Committee and the Senate Finance Committee. And I know that ECFA is making available information about how to reach these members of Congress, so that if you're inclined to do that, and it really will make a difference, please do it, because anything we can do to head this off would be great. Now, Dan mentioned that in terms of questions, we're going to go ahead and start. We want to be respectful of the fact that this was committed to be a 30-minute webinar, and we've provided an overview of where everything stands with this issue. But for those of you who'd like to stay on with us for a few more minutes as we take some questions, we're happy to do that. So Dan, do we have some questions?
Yes, and so if you have a question, submit your question to webinar@ecfa.org. Just a couple of items, and I think some more are coming in, Mike. The person on the webinar asks whether this nonprofit parking tax has any implications in relationship to church-owned vehicles provided to staff.
No, that would be a separate issue. That's a separate issue where you have to look at, the business use versus the personal use to determine the tax treatment for that. But that is a distinct issue.
Yes, two separate issues. And then another question, just wants to clarify their understanding about whether the parking costs would need to be added on with other elements of unrelated business income tax, and then that total compared to the $1,000 deduction to determine whether they have any net unrelated business income.
Well, that's right. So what would happen is the costs incurred to provide the parking, whatever amount is deemed to be subject to this tax, that would be added together with gross revenues from unrelated business activities. And if that total amount exceeds $1,000, then you have a 990T filing requirement. Then, of course, you're allowed to take deductions from the revenue for your other unrelated business activities to determine the net income from those activities. Now, I'm avoiding the temptation to talk about another problematic area, that starts this year, that says that losses in one unrelated business activity can't be used to offset income from another. That's another topic for another day. But the basic idea is that the qualified parking costs that are subject to tax, however that ends up being determined, plus gross revenues from an unrelated business activity, if that exceeds $1,000, you have a 990T filing requirement, and then you would normally be able to deduct the expenses that apply to that gross revenue from the other unrelated business activities.
Okay, good. Well, this next question probably depends on facts and circumstances, but the questioner is, in essence, is asking whether there's a high likelihood that a church would incur unrelated business income tax because of this provision if they simply have a gravel church parking lot.
Well, you know, let's just say, for the sake of discussion, we're all hoping that, as I commented in one session where I presented on this, we're all hoping that if we can't get this thing repealed at its core, that the IRS guidance that comes out is drafted very narrowly. As I said, we'd love to see it drafted in a way that says that this tax only applies to organizations that have blue camels flying east on Thursdays. But, you know, in the event that this guidance is drafted broadly so that it, you know, were to apply to a church that doesn't normally charge for parking in an area that doesn't normally charge for parking, then what's going to be relevant is the cost of providing the parking to the employees. And obviously with a gravel lot, the maintenance cost might be lesser. Again, we're back to that question of whether the total of those costs, together with any revenue from any other unrelated business activity, exceeds $1,000, and those would be the facts that you would have to analyze. Right.
Well, we may have some other questions coming in that we'll handle separately, but our time has come to a close for today's ECFA webinar on a federal parking tax on churches and other nonprofits. Is this for real? We hope this has been meaningful to you. You will be receiving another email tomorrow with a copy of today's PowerPoint slides and a link to the recording. Well, that's all for today's webinar, and I would like to thank Mike Batts for his excellent presentation, and thank you for joining us today for this webinar. God bless you.